we're live. Big smile. Wine. Cheers.
Cheers.
All right. All right. Welcome to Wine About It Wednesday.
Let's go.
Let's do this. All right, you guys, what's our topic today? What are we whining about today? Today, there's a little controversy y'all been talking about all over TikTok, all over YouTube. Every time I turn around, somebody goes, that guy in the White House is floating the idea of a 50-year mortgage to solve the problem of affordability when people want to buy a home. And I have a hot take on this. Surprisingly, I don't hate it. Hear me out. Hear me out. Take a sip of wine. I think this is a good time because it's Wine About It Wednesday. Oh. All right. So welcome, everyone. If you're new here, I'm Joie Ashworth.
And I'm Miosha Williams. And we are the type of real estate agents who get into all things real estate. And we actually see a lot of things that you would never believe, but it's okay because at the end of the day, we get to whine about it on a Wednesday.
Yes, ma'am. That saves me. Okay.
So tell me, Joie, why on earth would you as a real estate pro with a banking background support this, right? And so what I would probably say is that at the end of the day, as real estate agents, we're talking dollars, cents, and common sense today and every day. And so this has absolutely nothing to do with politics and just what makes the most sense financially, right?
Absolutely. I am not really into politics at all. I have a banking background and a finance background, mortgage background. So I just want to talk about the dollars and cents and common sense. You're absolutely right. So before we start to talk about mortgages, this 50-year mortgage and why I don't necessarily hate it, we got to have some background. We got to have a little bit of background. I want to take a second, though, and introduce you to one more person. Hang on one second. Well, hello, everybody.
Hello.
We have a Matt Tang sighting.
Matt.
Hey, Miosha, how are you?
We
Good,
just
how are
got
you?
started. Welcome, Matt.
like-
Matt, do you have your wine? Do you have your wine?
You like my background? I don't have wine.
Or your drink of choice, anything.
You're going to have to grab something.
Water, tea.
You got to be on.
A little stronger.
You got to be
I
on theme.
have baby formula. That's all.
There you go.
Matt has little babies running around that house, so probably not a whole lot of wine. But Matt is a seasoned mortgage professional with Weichert Financial. So I thought, who better to join us in this little fun discussion that we're having about the 50-year mortgage and whether or not it's madness. So we just got started, Matt. Welcome.
Well, thanks for inviting me. I find this very interesting. You guys are discussing this topic. A lot of people have been calling me about that too. So it's certainly a discussion
they already
I want to
want
jump in and see.
Yeah.
Prick your guys' brains a little bit too.
Yeah, they already want the 50-year mortgage. Okay, interesting. No, it's not offered yet.
Oh,
just
yeah.
To be clear. Just to be clear, it's not offered yet. This is
Nope.
just something
No.
that was floated. But I have a little bit of trivia. Matt, you like trivia. You're always talking trivia with us. What year?
Yes.
What year did the FHA introduce the concept of the 30-year self-amortizing mortgage?
Oh man, I knew this. That was one of my my slides that I when I talk about FHA loans and stuff. But the exact years I'm going to say, hey, escapes me. But the general time frame, I think around the Great Depression. Am I correct?
Hey, very
Ding, ding,
good.
ding.
Excellent. Ding,
Right.
ding, 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 ding. I need to get better at my little effects and everything. But yes, you're absolutely right. You are absolutely right. Look at that. It gained. And so, what year did the 30-year mortgage gain widespread acceptance and become a standard option? What year ish? It wasn't 1930. How long, in other words, how long did it take for them to figure it out, package it up, and get it out there?
Can
Just
I
guess.
cheat a little bit?
Just guess. No, you can't cheat. You got
not 1930s or
So it wasn't 1930s. It actually
32.
took 30 years before the 30-year
wow,
mortgage
okay.
was a standard option in the marketplace. So this is not the first time we're having this discussion, right? Obviously, if you can take yourself back in the Wayback Machine back to 1930s and somebody floated the idea of a 30-year mortgage, they probably got darts thrown at their head and were told that they were super crazy. And then 30 years later,
Yeah.
in the marketplace.
Well, I would say, I mean, even till today, I mean, if you talk to people in other countries, they probably don't have 30-year mortgages either.
Right. Yeah.
Yeah.
The point is change takes time because I mean they just weren't used to that. Society is just not used to certain things. We were only used to maybe 5-year loans and properties. And then it went over a little bit later to existing homes, resales. And then they started introducing the idea of this 20-year mortgage, like 15, 20-year mortgage. And then they realized, you know what, we could get a lot more people buying and owning homes if we actually amortize this out over 30 years. And 40-year loans have been around in California for a while, not backed by Fannie and Freddie. However, a niche product that has been very popular in California because of those super lovely high prices for those Calabasas homes and LA homes. Lovely, lovely.
Yeah,
Right. So
California is an innovator, I would say, when it comes to mortgages. Even today, when we do a lot of the non-QM loans, most of those companies are based in California. So yeah,
exactly. Exactly.
And so, as we think about kind of just starting this conversation as it relates to entering the ether, I guess, with this idea of a 50-year mortgage, I think it's also important that we just kind of also level set and talk about who is this actually for? Because anytime a product hits the market, it's not going to be a one size fits all, and it's not really going to be relevant to everyone's situation. But this is certainly an option to be talking about to a certain market of people. So, who do you think could really benefit from this 50-year mortgage concept?
Right. So here's my thought. And Matt, you can tell me if you have any thoughts because you talk to people all the time. Maybe this is for new grads. They make a lot of money in whatever entry level job, but they have really high growth potential. And I'm talking about like barely on the cusp, these fringe buyers. This is, again, not for everyone, but there's a certain percentage of the population that it's going to be just barely out of reach, that 30-year. They're not going to be able to afford it, or maybe they can afford it, but they can't qualify for it, right, Matt? Like there's a couple of incomes in the house. For example, engineers, analysts, cybersecurity, investment bankers. I'm thinking like dual income, no kids, but one person is self-employed and aggressively writes off everything. So we can't use their income, but we can use the other person's salaried income that's well established. They got 2 years tax returns, no problem. They got to only qualify on that one person, but there's other money coming into the household and into the bank accounts. And like families where maybe one person just returned to work, maybe somebody just had a baby and she's just back to work. She can't use that income, but she knows she can produce from that point on, no problem. She's going to earn income, but can't use her income for qualifying. And then there's the people kind of like me. I have a story. I was 24 when I bought a house. And I've always, ever since I was in college, worked 2 tree jobs. I always had 2 tree jobs all the time. So, of course, when I bought my first house, I kind of barely qualified for it, but they gave me this 30-year mortgage. And I was always going to work. I was always going to work that second job, always going to work that third job, because that's just how I'm built. So when I qualified, I didn't have the second job yet, but I was going to go out and get one. And I worked part-time. I was working in banking, and then I worked part-time at another role in that bank. And I was very disciplined with what I did with my money. I had a plan, right? I didn't make that much money. I bought my first house. I didn't have any furniture. There was no couch to sit on. But when I laid on that floor, I should have uploaded pictures for you guys. I have pictures of people and their kids when they bought their first house, and they're on the floor doing like snow angels on the carpet because they own that house. They own that floor and those walls. And I told them, I want you to look at those floors and those walls when you close on this house so that you can say, that's mine. Okay. So you get that joy out of it.
And so
So
what
there's
I'm also
always-
hearing you say is that really the people who this is for are people who have an opportunity to utilize and leverage additional funds that they have to employ this strategy that you're calling and kind of coining mortgage hacking.
Yeah.
So talk a little bit about that and what is how are we hacking mortgages these days, and what's the best way to do it?
The best way to hack your mortgage, whether you have a 15, 30, or a 50, is to take whatever extra money you have and throw it at that principal, reduce that principal, especially at the front end of the loan. If you can do it on your first payment or in the first month or in the first year, even better, because we all know that when you make your first mortgage payments, that's almost all interest. It's purely interest. The bank is jumping with joy because look at how much interest you're giving them. And it's a fixed rate mortgage, but if you look at the breakdown, it's mostly interest and a principal. So what you want to do is hack that mortgage. Don't let that mortgage hack you. You hack that mortgage. Sorry, the wine is kicking in. So you throw that extra principal, you throw that extra money. When I say extra, whatever you're making in your side hustle, take at least some of that and put it towards the principal every month. Whatever you can afford, $50, $100, $1,000. As long as you can get that done as soon as possible, you're going to end up paying far less money in interest over the life of that loan, and you're going to shave off years. I know you heard me. Years from that mortgage loan term.
So, okay, talk a little bit more about that though, because, you have people out here that, maybe they're first time home owners or buyers and they're going into it And, you know, if you've never purchased a home before, one of the things that like you're really surprised about and really excited about is that you don't have to pay your mortgage for 45 days. So you're like, oh my gosh, I get to save all this money. And so are you saying that with this mortgage hacking that I should at least put something towards that before my due date? Or like, how might I go about when you say as soon as possible? What's that timeline that you're talking about when you're saying mortgage hacking?
All right. So, as real estate agents, we sit with our clients at the closing table. And usually at the closing table, you get a little coupon. And it says, this is your first payment coupon. And on that little coupon, there's a little line that says principal reduction. Okay. 45 days, whatever, 60 days, I don't care. It's baked into the loan already. You've already paid for that first month, however you think of it. So that's a good point. You're going to want to talk to your loan officer. So Maddie Ice over here is ready to go, and he's going to help you explain. He's going to help you figure out and decipher what that first payment coupon is going to look like. When is it going to hit? It's usually due on the first of the month. And usually when you close, let's say I closed on November 15th, Matt, when's my first mortgage payment?
So if you close on November 13th, so the payment, the rule is always the following first of month after a minimum of 30 days has elapsed. So if you close on November 19th today, then first would be the next first of the month. However, a whole 30 day has not elapsed yet. So then obviously your first of the month will be January 1st. So that's when your first payment is due. Mm-hmm.
Exactly. So
don't we in that new year with the mortgage hack.
Hey.
Hey.
January 1st, you can start hacking right away on that first
yes.
payment.
Yes.
Yeah. Hack away. And like I said, $10, I don't care what it is. Put it towards principal. You need to get in the mindset and the habit of attacking your principal. If you already own a home and you have never put extra money towards principal, either by month or once a year, you need to start now, actually. Now's a good time. Some of y'all, though, have really cheap mortgages. Your interest rate on your mortgage is really cheap. Okay, there's a strategy for that as well. If you've paid off all your other higher interest rate debt first, then you start hacking your mortgage. But I don't want you to be carrying a credit card balance at 25% and trying to take down your principal on you got cheap money. That's almost free. Some of y'all refinance at 2.25%. Cool. Keep that. Pay off all your other debt. Max out your 401k, all the retirement funds first, and then do your principal reductions.
So what happens to like my mortgage hack if I lose my job?
Oh, that's a really good point. So if you're disciplined, which I hope anybody who is taking advantage of 50-year mortgage is very, very disciplined. If you're disciplined, you have an emergency fund. Anybody who has gone through a first-time homebuyer course, you know what an emergency fund is and how many months of savings you need to have in that savings account in order to survive if you lose your job. So you're going to be able to drop down and make that minimum payment because it's an option. This is all about optionality. Everybody loves a good option. So this month, we don't have a job. That primary breadwinner does not have a job. But maybe the second person who is driving for Uber or whatever has a job. So you can float. You can buy some food or whatever. You can pay your mortgage. We don't want to go into default. We don't want that notice of default. But at the very least, you drop down to that minimum payment. So this month, we're not hacking the mortgage. It's fine. As soon as you get back to hacking, immediately, as soon as you can.
So that all sounds all well and good and beautiful and, rainbows and unicorns in terms of like having a plan, doing the right thing, being able to mortgage hack. But you know that anytime that we're talking about topics like this or anything that we've seen in our real estate careers, there are always going to be haters. And there are lots of things that they're going to have to say. And so this is a segment of our podcast that we talk about, and it's called Haters Will Say. And that's where we're going to pull out for you some things that are common things that people are going to say because they're negative Nellies, but maybe they're also thinking from a very practical standpoint. And we want to be able to provide maybe a different lens on how to think through that. So, for example, here's a hater's argument related to the 50-year mortgage. You're only saving a couple $100 because the interest rate is going to be higher on a 50. So what do you say to that, Joie, business bank background?
You're absolutely right. So, the rates are probably going to be higher. I mean, that just makes sense. If you have a 15-year versus a 30-year, the 50 years is probably going to be higher. There's more risk to it. And Matt can speak to that as well. But it's about qualifying. It's all about those people who are on the fringe. We're not doing it necessarily for the mortgage savings. We don't care. We just want to qualify. And it's a way to get your foot in the door for those people that I was talking about. Those people that I was talking about are probably very disciplined people. They're highly marketable skills, but just right now it's entry level and they're going to make a ton of money later on. They're a great candidate for a 50-year mortgage because they will get there and they're probably smart and they're probably highly disciplined. So we just want to get their foot in the door, right? Matt, do you have any input on that?
Yeah, I agree. I mean, because everybody knows. I mean, even though right now there's 15-year mortgage available, right? And we know 15-year mortgage, the rates are lower than the 30 years, but you don't hear people saying, "Oh, you shouldn't do the 30 years because 15-year mortgages are there." No, because 30, even if folks can afford 15. Unless you really have a lot of disposable income left over, I was always suggest just do 30 because you're not kind of get yourself buying to the higher payment. You have a lower payment, but whenever you feel like you can control the pace yourself, like you mentioned, and I go back to what the 50-year mortgages are good for. Yeah, is that exactly like those examples you give. Is for folks who are upwardly mobile, right? They just got out of school. A lot of the doctors' mortgage program are kind of have the same kind of idea. Recent graduates, they probably, unfortunately, have a lot of student loan debt, but the promise of them being, making a lot of money is very real, is there. So yeah, 50-year mortgage makes perfect sense to me. Business people as well, they need that cash flow, to qualify for the mortgage. The lower monthly payment versus a higher monthly, perfect. And then but we all know, and those in business, for when you're making it good and you can really put some extra money down, so why not? And so I concur in all those points.
Very good. I just want to say we're not necessarily promoting the 50-year. Hey, this is a great idea. Everybody go get one. For certain people, it might be a great idea. It might work.
Yes. And so that's all well and good in terms of like it being an option ideally, but I will say, but isn't this illegal? Like, aren't there laws against that? And isn't there something called Dodd-Frank that's not even going to allow this to happen?
Yeah. You have a point. Right now, Dodd-Frank, the Dodd-Frank Act, and also a little bit of background. Matt, do you want to explain Dodd-Frank or like a seventh grader, like quickly?
Well, I know it's for consumer protection. There's a lot of the under Dodd-Frank. It's a lot of the bad practices, especially those that happened the last financial meltdown. Yeah.
Mhm.
So when all these crazy loans like no doc negative amortization, all that crazy stuff came, balloon payments. So
Mhm. The Big Short.
Dodd-Frank,
If you haven't watched The Big Short, go watch it.
yeah,
You
yeah,
need to know.
yeah. So Dodd-Frank kind of outlaw that, but I tell folks, I mean, if as long as the borrowers are educated, nothing is misrepresented, they can make up their own mind.
Yeah. So laws can change, and that's one of the reasons why this is not going to happen tomorrow. The Dodd-Frank Act has to be amended at least to back the 50-year mortgage. Fannie and Freddie need to back the 50-year mortgage to make it mainstream because they got to be able to package up these mortgages into mortgage-backed securities, right? And
Mhm.
so they gotta do some things. But yes, currently it's not going to happen, but it can be amended. It can be voted on, and it can be changed.
Okay, but Joa, like we know based off of the research and the stats that the average buyer is 40 years old. So we don't even have 50 years left to live. Like, why would we go into a 50-year mortgage if I'm 40 years old?
It's funny. I've heard this argument before, and it's kind of scary that the first-time home buyer on average is 40. Like I was 24. My first house cost $83,500. And it was a huge purchase, and I was poor.
Yeah, I
But
think I was 24 when I bought my first home too.
see?
Actually,
40
same here, same.
Oh, really?
Ah, cheers to that.
Years. Yes. But no, that's a really good point. Americans are terrible at saving money and running up credit card debt. So, we really have a problem. By the time we get to 40, we're just paying off our student loan debt. But this is kind of in the cards. This is one of those things that keeps happening in our lifetime. If we push back on the 50-year mortgage, we just have to allow the idea to sink in that we're only ever going to rent. So history repeats. The 15-year was standard in the 1930s.
That was one of the arguments I saw. Yeah.
Yeah,
That
go
was one
ahead.
of the arguments I saw when the first brought up the 50-year mortgage. People are saying, "Hey, are they pushing folks just to be perpetually quote unquote renters because you never own your home?" But my argument is, if you rent, I mean, you're paying 100% interest. So, and then you never get to. Yeah,
Exactly.
so at least if you own, you have equity. You build equity when you cash out. That's your money.
So we're not saying that we want to start a 50-year mortgage at the age of 40 and pay for 50 years. That's why we're mortgage hacking. We want to pay that mortgage off in 22 years, 15 years. It depends on how aggressive you're willing to hack that mortgage.
So that's a great point because, we also hear that argument from haters in terms of like, well, I did the numbers. And if you're talking about interest on a 50-year mortgage, that's really like over $1 million on like a $500,000 loan. So make that make sense.
Yeah, it's the same answer. You hack the mortgage. It's called an interest curtailment. So your principal reduction causes an interest curtailment. We're not going to let that happen. We're not going to let our friends don't let friends pay 50 years on anything. It's just like that car loan. That's the longest term we've ever heard of. Friends don't let friends, pay that. If you get that loan, again, it's just an option. You're going to pay it off early. So,
and that sounds great, but people are too undisciplined, right? That's the other thing that we hear is like, that sounds wonderful. Like mortgage hacking works in theory, but people aren't going to be disciplined enough to do that, right?
Well, that's that Dave Ramsey argument. Yeah, Dave Ramsey is like, no, you should never borrow money because people have no discipline. But what if people have discipline? I mean, yeah, I mean, like you said, credit cards. I mean, nobody ever should pay minimum payments on credit cards, right? Because you never pay the credit cards off. But when the situation arises, sometimes it makes sense to pay things on credit card, as long as you don't carry the balance that long. Yeah. So
Yeah. So that's
everything is
what we
pros
have
and
on our
cons.
screen. $6,473 in credit card debt on average. And
Oh, okay.
that $8,000 in savings is actually skewed because of a few highly, the elite 1%. Not if you look at certain areas of the country, people have zero in their savings and a lot of credit card debt, which is why mortgages and home ownership ain't for everyone. We're not telling you guys to go and get a loan for a house if you are not cut out for home ownership. But if you have like just an ounce of discipline, if you sit down at the kitchen table with the smartest people you know and tell them, help me make a plan for this. Can I be a homeowner? I've always wanted to be a homeowner. Can I do this? Can you help me do this? You'd be surprised how many people in your family will help you carve out a plan for maintenance, actually even identifying the home that's not going to need a lot of maintenance for a long time, and an affordability plan where you're not just paying the minimum payment like your credit card. Thank you so much, Matt. And that's how some people get into this problem. You have a spending problem, but then you have no plan. You think, oh, look, the minimum payment, honey, it's only $25. That's what they want. Do you know how much it costs to have a credit card with a $6,000 balance at 25% interest? That's crazy. That's the real madness. It's not these 50-year mortgages. It's what your credit card balance is right now and your high interest rate.
So, Joao, won't the bank just put all this extra money that I'm mortgage hacking into escrow?
That's funny. I've heard this argument as well. I knew someone who did this and the bank just put her money against the next payment or in escrow or suspense or whatever. For y'all who don't know, if you're new here, there is such a thing as an escrow account when you open up a mortgage. And Matt can attest to this. There's all kinds of things that go through escrow. Your taxes are paid out of escrow. Your insurance is paid out of escrow. They don't trust you to make your payments on those things because those things can be very problematic for the bank who's got skin in the game on your home. So they have a portion of your payment going into escrow to pay taxes and insurance. And every once in a while, a rogue bank decides to take whatever extra you're trying to hack, and they throw it in escrow, or they put it in the suspense account, or they just put it towards your next payment because you didn't specify. Remember those really smart people that are going to be around your kitchen table with you to help you plan for home ownership? Get them to help you make sure that your mortgage payments are going to what you want them to go to. So you make your mortgage payment, you specify principal reduction, or if you're making a purely 100% principal reduction payment, once it hits, you log in. You go online, you log into that account, and you make sure you click on the little tab that says escrow. Some of y'all have never done this. You click on that little tab that says escrow, make sure it's not in there. Make sure that your principal balance is going down. And then you're going to know that you're winning. You are hacking that mortgage.
Well, that's great. And so I think that is so important to be able to just address these misconceptions head on and really educate ourselves so that we can be setting up our futures, which are super bright. And, I know that there are going to be some people that are listening to this podcast and thinking, you know what, this is too much, Taquita. Why don't I just go ahead and rent for the rest of my life so that I don't even have to think about this or worry about it? I don't have to mow my own grass. I can just call my super and they can address things as they come up. And so what would we say to that? Because there really is a reality check, though, that goes into renting versus buying that I think we have to talk about when we're talking about 50-year mortgages.
Right. So, I mean, it's Wine About Wednesday. So we're whining about it. I don't love home ownership because I got to do my own maintenance and da 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 da. You know what? This is a judgment-free zone. I'm drinking Cabernet, and it is from, where's yours from? Mine's from Chile.
Mine is from Argentina.
Yeah, I mean, this is the judgment-free zone. I'm about to have another glass. If you want to be a renter for the rest of your life, go for it. Like, be proud, do it. Like, I'm not going to judge you. Nobody's going to judge you. But here's the reality. A lot of y'all have always dreamed of owning a home. When you decide to take that risk and own a home, you have to think about worst case scenario. Worst case scenario, if you lose your job and you can't make your housing payment and you are renting, how long before my landlord kicks me out? It's probably what? 30 to 90 days, depending on the jurisdiction, the dispossessory process. I've had to do it. I've had to kick people out of my rental property. And I want to do it as fast as possible. The minute they miss their first payment on their rent, I got to send them a notice. Dang it, I hate doing that. But I have to, because there is a process. And if they're going to keep doing this, I got to be able to be efficient and get them out. Whereas if I go and miss my mortgage payment, the foreclosure process is like 1 to 3 years. Matt, chime in on this. Like, how long is it going to take before they come take my house and auction it off on the courthouse steps?
Oh, I would say definitely no sooner than 18 months, I would say. Minimum.
Yeah, they don't want your house. The bank does not want your house, I promise you. They're going to try this and that. Can we put the interest on the end of the loan? They're going to do all this work to try to get you back to good, because they do not want to put you out of your house. They want you to try to work with them to get back to good and get back on track and pay that mortgage. Whereas your landlord, they will happily take their house back, right? They need to rent it out to somebody, because some of them have mortgages on every single house. They did the Burr method, where they buy, rent, refinance, rinse and repeat, whatever it is. So, like, think about that. This is a judgment-free zone. Make a decision. If you don't want to be a homeowner because of all the things that come with home ownership, I'm glad you thought it out. I'm glad you didn't go and buy a house and have that not be for you. But you know what? Here today, we have a loan officer. We have a loan officer who would probably be happy to help you calculate scenarios and different ways to pay off your mortgage first. He could probably do different amortization schedules. He could probably put you on a schedule for the first year. You come back to year 5. If you can't refinance by then, that's the other thing about these 50-year mortgages. Who stays in a house with no refinance for 50? Come on. You don't even do that for your 30-year mortgage. Everybody refinances at least. The average homeowner stays in their house for 10 to maybe 15 years, 20 if you're in California, but that's it. They're not staying in their house. They're upgrading to a bigger house, or they're downsizing to a smaller house. So, you have a plan. This is a great time to use your new AI friends, your ChatGPT, because you can just give it the prompt and say, hey, ChatGPT, I want to pay my mortgage off in 20 years. What do I have to do if I only have $100 the first year, and then I have $1,000 in year 5, and I have $1,500 in year 10, whatever it is? Give it a structure. How fast will I pay my mortgage off at that rate? And it will spit back a calculation for you and an actual plan. Use that like your new amortization schedule and follow it as best you can. Again, no judgment, but you can do it. You can hack that mortgage.
Yeah, it's important too to be always cognizant of like the extra bonuses and the windfalls, right, that you have come into your life. And so, if you've got a commission check, or you've got things in terms of bonus, or you've just got some extra money, use that and have a plan around how you're going to put that towards like your principal reduction, right? Because it's money that you weren't necessarily counting on anyway.
Right.
And so just utilize that to put towards your futures, spending in these frivolous, ways. So
Exactly.
curious about what you're doing and think about some of these other like extras and bonuses that you may have.
Absolutely. Yeah. And that's the thing that I did. Every time I got a raise, I didn't change my
Don't judge my
standard
spending
of
on
living.
don't judge my
Yeah.
spending on Labubu dolls.
No, like you get a
Maybe
raise.
just one Amazon order versus 10. Okay,
Right.
so just a slight alteration in lifestyle for the greater good.
You don't change your full standard of living to go get a Lamborghini. You come up with a new plan. This is our new income. And you get together with those smartest people and figure out what's the best way I can do this. I realize not everybody's going to do this. This is not for everyone, but it is for some people. It is for some people who know that they want to maximize their budget and they want to come out on top, and they're playing the long game. So it's not for everyone, but it is an option. And I love what Matt said about the minimum payment. Would he recommend a 15 if you can afford it versus a 30? He would still recommend a 30 unless the interest rate is so much better on the 15 that you just got to have it. But just go with the 30 and pay it like a 15. It's an option. And in a rough month, and back down to the minimum payment. If it's time to pay for Christmas presents, you can back down to the minimum payment. Get back to packing the mortgage as fast as you can. Anything else to add, Matt or Miosha?
I don't think so. I think that we covered like all the bases, and I'm really clear on the
No, I
fact
mean,
that,
yeah, like everything else is pros and
Yeah.
cons and
yeah.
sides.
Yeah. So with that, I think we are done whining about this very wine-worthy topic.
Absolutely. And so we want everybody out there
This
that's
is fun.
watching, please
Yeah.
like, subscribe, and comment your thoughts on the 50 year. And,
Yes.
tell us what you thought about this. We're always loving your thoughts and your opinions. It helps us also shape kind of what we want to whine about the next time that we're together. And so we can't wait to see you on the next Wine About Wednesday. So have your wine or your drink of choice ready and get ready to pour it up so that we can talk about all the hot topics that
For
are
having
happening
me
in the
on.
house.
Yeah.
Thanks for being here, Matt. We are glad that you could join us on Wine About It Wednesday. And
Thanks
we will see you
thanks
next
for the
time.
invite. Yeah, this is fun. All right, guys.
Cheers.
Cheers.
Or finish that bottle. Finish that bottle, you guys. All right.